Hello friends, we'll be discussing an illustration which will be related to adjustments of provisions that will be provided on reserves or something like bad debts or doubtful debts. Now, apart from the accrued income or outstanding expenses, we understand that there are more provisions or rather reserves or kind of bad and doubtful debts that we have to take into consideration when we talk about different kind of adjustments. So based on that itself, we have another illustration coming up for you. Let's write it down for yourself. Now, given below are the balances of Panadian. This is a company as of 31st of March 2016. The balances have been given as per the trial balance, that means debit and credit balance. Let's read it out. Capital balance is 1,20,000, which will be shown in the balance sheet. Debtors and creditors are 22,000 and 22,500, again balance sheet items. Sales has been mentioned as 59,700, which is a trading account item. Drawings is 2,000, which will be subtracted from the capital balance. Cash in hand is 8,200, asset item. Cash at bank is 30,000, again an asset item. Wages is 2,500 here. Purchases goes to 10,000. Opening stock has been mentioned as 30,000, again trading account item. Building premises is an asset, 60,000 asset, or rather we can talk about balance sheet asset side. Bills receivable 14,500, again is an current asset, hence it will be mentioned in the asset side here. Office telephone expenses has been mentioned as 3,500, which will be a part of profit and loss account. General expenses 9,000, again a part of profit and loss account. Goodwill again is an asset, 10,500 will be shown on the asset side of the balance sheet. Now we know that which item will go where. There are certain adjustments also. Let's read it out for you. Closing stock amounts to 5,000 here. Interest on capital is at the rate of 6%. That means it is an expense for us. On the other hand, the next adjustment refers to interest on drawings, which is 5%, again an income for us. Fourth adjustment refers to writing of bad debts, which has been mentioned here, and the amount has been clarified as 2,000 rupees. That means bad debts are supposed to be written off. It's an expense for us. Provision for bad and doubtful debts on debtors is supposed to be created at the rate of 10%, which is again an expense, or rather it's a provisional expense for us. We have to prepare the final accounts for the year 31st of March 2016 for Panadian. So let's start with the preparation of trading account. So the trading account details have been provided here. We just have to go ahead and read it. So the first thing that we have mentioned is the opening stock, amounting to 30,000 here. The next is the purchases. Purchases on the other hand is the net amount that they have already mentioned, hence we have taken that only into consideration, which amounts to 10,000 here. Apart from that, we have wages, which is 2,500. With this, we complete the debit side of trading account. On the credit side, we have sales and closing stock. Sales being 59,700 and closing stock being 5,000. Now, it's time for us to figure out whether we have a debit balance or a credit balance. That means whether we have gross profit or gross loss. Let's figure that out. Now, the interim balance shows that the credit side is more as compared to the debit side, as you can see in the balance sheet, or rather as you can see here in the format that we have prepared, which shows that the credit side is more. That means we have gross profit here. Let's figure out how much is the gross profit. So, gross profit has been mentioned as 22,200. That will be carried forward in the preparation of profit and loss account. Let's close this balance sheet, or rather let's close this trading account here. Now for your reference, we have prepared the profit and loss account. We have mentioned all the details here. Let's start with the expense side, which refers to office telephone expenses. First of all, already predetermined answer which has been mentioned in the trial balance, hence we'll put that amount itself, which figures out to 3,500. Next amount will be general expense 9,000. Now, interest on capital is supposed to be provided at the rate of 6%. 1,20,000 is the capital balance. On that, 6% will be 7,200. Bad debts have been given in the adjustment that they have to be provided or rather written off at 2,000. Hence, directly that amount has been mentioned. Provision for doubtful debts has to be calculated. Now, provision has to be calculated on the basis of the balance amount after deducting the bad debts from the debtors. So debtors total balance is 22,000 that we have. Out of that, 2,000 bad debts has been subtracted. Whatever balance is left, in this case 20,000, on that we have to put down the rate of provision, that is 10%, which has been mentioned in the illustration or rather in the adjustments. So 20,000, 10% on that will be 2,000. That amount has been mentioned as provision. This will have also another effect as in terms of the liability side. So we'll mention that accordingly when we prepare the balance sheet. Now, on the credit side, we have gross profit which was carried forward. Next is the interest on drawing. Interest on drawing is an income, just like interest on capital is an expense for the business as it has to be provided by the business to the partner. Similarly, interest on drawing is a specific amount that business charges the partner because he has withdrawn certain amount there. So 2,000 is the drawing. On that, you have to charge the amount of specifically rated as 5%, that will be 100 rupees. Now, with this, we have completed the profit and loss. It's time to figure out the interim balance there. Let's figure that out then. Now, on the contrary, as per the other problems that we have solved, we have figured out that in this case, debit side is more as compared to the credit side. Credit side total is 22,300, whereas debit side total is 23,700. That means we have figured out that there is net loss here. Let's figure out how much is the net loss. So net loss that we have figured out is 1,400, which will be subtracted from the capital balance. Let's close this profit and loss account and move to the preparation of balance sheet then. So we have prepared the complete balance sheet here. Let's start with the liability side. Capital balance, which has been mentioned as 1,20,000, out of which net loss has to be subtracted. And interest on capital has to be added because that is an income for the partner. Now, after that, we have drawings and interest on drawings. Both has to be subtracted. That will give you a balance of 1,23,700 on the outer column. The next item on the liability side is the sundry creditors. Direct balance can be mentioned there. So 22,500 has been mentioned as per sundry creditors. Now, going on the asset side, we have goodwill and business premises as constant items. So let's mention that. Closing stock has been also valued at 5,000, which has been mentioned. Debtors total amounted to 20,000 or rather 22,000, out of which we have subtracted the bad debts 2,000. After which we have subtracted the provision for bad debts or provision for doubtful debts as 2,000, and the outer column has been mentioned with 18,000 balance. Now, bills receivable, cash at bank and cash in hand, all items have been directly mentioned as there are no adjustments related to it. Now with this, we have completed the balance sheet posting of entries. It's time for us to figure out whether the liabilities balance is equal to the asset or not. So as we figured out that the balance sheet total is 146,200, that means 1,46,200, which is equivalent both on the liability side and the asset side as well. Hence here we clarify that all these details have been already figured out and that there are no problems in evaluating the details any further. So with this, we mark the closure of this specific illustration. Thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.